Good morning. Thank you all for joining us today for the Lytham Partners Spring 2022 Investor Conference. My name is Joe Dorame, Managing Partner of Lytham Partners. I would like to welcome Scientific Industries, ticker symbol SCND on the OTC. Presenting from the company today are John Moore, Chairman, and Helena Santos, Chief Executive Officer. Before we begin, Lytham Partners is one of the country's leading investor relations firm with more than 2 decades of experience. We have built one of the industry's most effective platforms for connecting small cap companies with quality institutional investors. Hopefully today is another example of the value we can add. As a reminder, management will be available for one-on-one virtual meetings. If you would like to sign up, please visit lythampartners.com/virtual and click the one-on-one meeting request button. Now I'd like to turn the presentation over to John Moore, Chairman of Scientific Industries. John?
Thank you very much, Joe. So Helena Santos has been the CEO of Scientific Industries for 20 plus years. She built Scientific Industries into a successful, profitable business that was paying dividends. She invited me to join the board, and she wanted the next 5 years to be more rewarding for the shareholders, herself among them. So if you go to the next slide, you'll see our disclaimer statement, our safe harbor statement. Next slide. This is the 3 segments of the presentation we're going to be making today. And then, so she used the cash flow from the 70-plus-year-old Vortex Genie business to pay dividends and also to acquire 2 other businesses. One was a company called Fluorometrics that she acquired in 2011 that was the predecessor of Scientific Bioprocessing, and Torbal in 2014. So she asked the question, how can we harness the huge off-balance sheet assets at Scientific Industries to create significant shareholder value? She asked the following questions. How do we capitalize on the fact that we've sold over 1 million Vortex Genies and they're a fixture in every life science lab around the world? How do we take advantage of our license and IP for optical sensors at Scientific Bioprocessing, where Sartorius and other life science companies have sold over $1 billion of equipment enabled by our technology? And then the third question she asked was, are there trends in the pharma manufacturing and synthetic biology fields that we can benefit from so we can gain a dominant market share in these new emerging fields as we have in vortex mixing and pharmacy scales in the case of Torbal, but even to be able to even harness larger markets? And then the final question she asked was, how can we grow our sales, our margins, and the multiple that our business trades at? And the answer to that was to focus on being a life science tool company. And I'll give you some more details about the other direction that we decided to go together. So if you move to the next slide. What we did is we broke down the business into the Vortex mixer market, which is about a $40 million total annual market that we have about 20% market share of. So it's around a little less than an $8 million business. The North American pill counter market that Torbal dominates the scale portion of that business, but has just recently introduced a product for an automated pill counter. That market's around a $40 million a year market where we're aggressively growing market share. And then what we did was we identified that these licenses that we had given to Sartorius and GE, now Cytiva, address about an over $1 billion market worldwide, and for a new field of emerging optical sensors. So this is where we decided to work together to invest, to build on the insights that we had about how quickly this market was developing, there were some major market forces that were continuing to make this look like an interesting area, and nobody else besides Sartorius and Cytiva had seen the opportunity. We think we identified some really exciting growth opportunities. So we raised $26 million of capital, and I'm going to describe some of the details behind this growth opportunity we've identified. So if you'll go to the next slide. So the trend that we identified that is really transforming the pharmaceutical market is a new field called bioprocessing. And 7 out of the top 10 selling drugs are now biologic drugs. And so historically, pharmaceuticals have been small molecule drugs, and they're very simple to manufacture. They're very small molecules. They're 25 atoms, about less than 10 manufacturing steps. So quality and yields were very high for that industry. But as we've diversified into biologics, and you've probably heard of things like CAR T or immunotherapies using the body's own cells to cure itself, these drugs are extremely large, extremely complex. So they're over 1,000 times the size of a small molecule. And they have, instead of 10 manufacturing steps, they have 1,000 manufacturing steps. Now, what problem does that create? The problem it creates is huge losses in manufacturing, over 50% yield losses. And the other thing is that the cost of these therapies are very high. They can often be hundreds of thousands of dollars for rare diseases, for cancer therapies. So what we need to do is, we believe that we need to come up with a way of making the manufacturing of biologics simpler. And we call this approach that we're bringing digitally simplified bioprocessing. And we believe that sensors are the key to simplifying this. So if you go to the next slide, I'll talk about how we're investing in scientific bioprocessing to expand this opportunity for the company. So the current world, that if you were running a biologic manufacturing plant, you would manually sample from one of your 1,000 manufacturing steps. You would have one of your assistants run down the hall to the data analytics laboratory, and they would do a number of tests on the product. Now, the challenge is, when you're manufacturing a biologic drug, you need to keep it, it's like a living organism. You need to keep it within a physiologically relevant design space. And as you're manually sampling, it takes about 2 hours to go from sampling to testing to know whether you've gone out of that design space. Now, if you go out of that design space, meaning if the pH changes, if the dissolved oxygen changes, you've got to throw away that entire batch. And that's why there are all these huge losses. So the world that we envision using these optical, real-time, very small sensors is the next slide. And the next slide basically shows the world of the future, which is sensors in every vessel, from research to process development to manufacturing. And these sensors bring back huge amounts of data in real time in the manufacturing process. So there's no longer any running down the hall. There's no longer 2-hour lag times between the time that you sample to the time that you read the material, you read what's happening in the process. And you're able to actually make changes to the manufacturing process in line, in time, so you don't have any more yield losses. And this is all basically a combination of the data from the sensors combined with advanced machine learning and artificial intelligence algorithms, and all enabled in the cloud. So if you go to the next slide, what you'll see is, so we bought a company in May of 2021 called Aquila Biolabs. And Aquila Biolabs has 290 customers, some of the largest pharmaceutical companies, synthetic biology companies, crop management companies like Archer Daniels Midland and Cargill. And so all these, Google X is another customer. So we have all these very prestigious customers. And what Aquila has essentially accomplished over the last 6 years is they've convinced those 290 companies to make the first step from manually sampling their processes to using real-time online sensors. And so we're very excited about that. We have product sales, we have great customer interaction with these customers, but we're looking to take the company the next step. And the next step is going to be even more dramatic than the step that Aquila Biolabs has made. So if you go to the next slide. So right now, scientific Scientific Industries, under the name of Aquila Biolabs, is going from these wired sensors to wireless sensors. And this is a really big shift because essentially those wireless sensors can be deployed in thousands of positions throughout those 1,000 different manufacturing steps. And that's going to mean a huge leap in real-time monitoring for bioprocessing. So if you go to the next slide. So how are we doing this? So first of all, we acquired the company back in May. In the first half of the year, we're integrating dissolved oxygen and pH sensors. That expands our market from just the microbial field, where Aquila has been very strong, to also adding the mammalian cell culture world. In the first half, we're also launching a new software system called DOTS. And what we're doing is we're integrating our sensors with very advanced data algorithms. And we're also, for the first time ever, able to do real-time monitoring in things like shake flasks, and to be able to not only be able to measure the growth of the organisms in the shake flask, but we're able to actually use actuators that actually feed the shake flasks, and we can do reactive experiments. Now, the reason that's important is because we can now do experiments in a shake flask at 10 to 15% of the cost of using a bioreactor. And why is that important? It's important because you've all heard of CRISPR before. CRISPR is digital editing of genes. So what's happening is there's now desktop digital gene editing tools that are creating 10, 50, 100 different hits for genetically organized modifying an organism. The problem then becomes, how do you go from the microtiter plates, which produce very small amounts of these modified organisms, how do you make enough of them to be able to characterize them so you can then rank them and decide which products to scale up? So we think there's a big hole in the marketplace there, and think we are uniquely positioned to develop that lower cost method of characterization. And in Q4, we're going to be launching the DOTS reader, which is the world's first miniaturized multi-parameter wireless sensor. And we think that that is going to also enable some of the billions of dollars that are being spent right now on something called the life science Internet of Things by companies like Labware, Benchling, Tetra Sciences. So huge amounts of money are being poured in this field, but nobody's investing in the sensor layer. And that's what's really important. That our competitors have added things like, being able to monitor temperature, being able to monitor humidity, but this DOTS reader, we can monitor up to 10 parameters at once, everything from environmental to dissolved oxygen to pH, and we're going to be adding other functionality. So this really is a very important new platform that's going to enable the synthetic biology revolution and things like CAR-T and other revolutions in biology. So if you go to the next slide. Every great innovation also needs great commercial drive. And we just completed a financing in March 2nd, where we raised another $3 million. So we topped off our cash. We now have, Helena will discuss the financial balance sheet, but we have a very strong balance sheet. And we've recently expanded our sales force from 6 people to 11 salespeople. We have some important OEM relationships, and we also have these manufacturing institutes where we collaborate with our customers to be able to show the industry why real-time monitoring makes a big difference. And I just want to pause and just make one comment that right now, workforce is one of the biggest problems of the pharmaceutical industry. You're hearing about it in industries all throughout the economy, but specifically trained technicians and scientists in biomanufacturing are in huge shortage. So you can imagine what is the power of being able to show people that you can eliminate manual operations. All research today in life sciences is trial and error, and it's based on scientific methods. But what we're proposing is a fundamental shift in the way that science is done to being able to do the research in silico, to be able to collapse years of research into days via these very programmed reactive control systems in the smallest batches, and that's going to have a huge impact on the throughput of scientific research. And we think that we're uniquely positioned to be able to deliver that. And we're also uniquely positioned to create the awareness because of these manufacturing institute relationships we have. So if you go to the next slide. Now I'm going to hand it over to Helena Santos, our CEO. And
thank you, John. So historically, our company has always had a strong balance sheet, which is debt-free and with positive cash flow. As of December 31st, 2021, which was the date of our last quarterly financial, our balance sheet showed net cash and investments of approximately $11 million, and we had no debt. In addition, we completed an equity financing in the beginning of March, approximately a month ago, of approximately $3 million in gross proceeds. The company's benchtop laboratory equipment operations is still a cash generating steady business, which did benefit from the pandemic and has remained steady post-pandemic. The excess cash is in part utilized to fund the company's growth strategy and the bioprocessing systems operations, as John has indicated. Currently, we have about 7 million shares of common stock outstanding, as you can see, and that does reflect the issue of the March equity financing shares. So our current market cap is approximately $42 million, and that's based on a stock price of approximately $6 per share as of yesterday, the end of March, and that gives us an enterprise value of approximately $28 million. So our company can be broken down in basically two segments. We have the long-standing core business of the benchtop lab equipment business, and now the new bioprocessing systems, with the majority of the revenues still being derived from the core business. The core business comprises of the Genie division, and since 2014, as John indicated, from one of our acquisitions, the Torbal division, with the Genie products accounting for about 75% of those revenues, and the Torbal for approximately the other 25%. The Genie products are sold primarily through the distribution network that we enjoy, such as Fisher, VWR, Avantor, Granger, and others worldwide. One of our greatest assets is today our extensive network of distributors worldwide. About half of our sales are actually overseas, and we are very strong in Europe, in Asia, China, Japan, some markets which are very price sensitive and where competition is huge. We still enjoy a nice market share. The revenues that were derived from the bioprocessing up until recently pertain to royalties, and going forward, which has already begun in this fiscal year, they are derived from product revenues. And this is particularly true since the acquisition of the Aquila Biolabs company in April of 2021. And now I will turn it back to John, and so he can talk a little bit more about the expansion of our bioprocessing business.
thank you, Helena. One of the great assets we have in the company is a terrific board of directors. And so our board consists of Dr. Jürgen Schumacher, who was the co-founder and chairman of QIAGEN, which is an $11.5 billion market cap company. He works out of Germany, and he was actually the original funder of Aquila Biolabs. Chris Cox, who was the chief commercial officer of the medicine company, which developed a biologic drug and sold it to Novartis for $9.7 billion. And Marcus Frampton, who is a personal investor in the company, but he also, his day job is to be the chief investment officer of the Alaska Permanent Fund, which has been remarked by Wall Street Journal and others by their remarkable success in funding biologics-based drug companies. So they funded Juno Therapeutics that was sold for $9 billion to Celanese. To Celgene, and it's now owned by Bristol Myers Squibb. They've financed Denali Therapeutics and Kodiak Therapeutics. So we've got a terrific board of directors. Another unusual thing for a company with a $28 million market cap or enterprise value is that our largest shareholder reports on two public companies. He is the largest shareholder in Repligen, and he's the largest shareholder in Scientific Industries. So quite a difference between those two companies. But Roy always remarks to us that he's always very encouraging, and he says that our company reminds him of the company that he built, a company called Spectrum Labs, that he grew to $40 million of revenue and sold for $297 million to Repligen, and then Repligen's stock price quadrupled. And so he's a big believer in us and what we're doing. And this really concludes the formal part of the presentation, and eager to answer any questions, Joe, that you might have about where we are.
Great. Well, John and Helena, thank you very much for that overview. So let's expand a bit on a few topics. John, I noticed you changed the name of your working technology platform from COCO to DOTS. Can you tell us why?
Well, COCO stood for Continuous Object Content Observation. And that really sort of underlines what happens. The only way anybody knows what happens in a laboratory is if you manually sample it. And so that was a good working title for the company, and because that really talks about the promise of what we're doing. But we wanted to take it even a higher level higher, which is right now there's tremendous amount of guesswork that happens in bioprocessing. And so we decided to call the product line DOTS. And why DOTS? DOTS is what these little optical sensors look like if you see them in an instrumented vessel, but also that we are connecting the dots for the researchers and helping them take the guesswork out of bioprocessing.
All right, very good. This might be a little early, but what kind of pipeline could you see, for the bioprocessing business by the end of the year?
Well, with our salespeople, what we're doing is we're doing a tremendous amount of prospecting. We're also doing a lot of digital marketing. That's what a lot of the capital is. That we're believers that we should be investing at least as much in building the market awareness of our products as we are investing in developing the new products. So one of the really innovative things that we've done as well is, right now, if you go to some of the best schools in teaching bioprocessing, they'll teach you these manual techniques. So we decided to invest a pretty substantial amount of our capital through these manufacturing institutes that we belong to, donating instruments so that we actually won a grant for $650,000 to create curriculum around our products with University of Georgia Gene Expression and Fermentation Laboratory. And we're now deploying those units throughout the teaching institutions, both technical colleges as well as universities, to basically connect these digital natives that are learning how to be bioprocessing students, bioprocessing engineers, how to use real-time sensors. And so we are really, as much as we're leading in technology, we're also leading in our engagement with the community, and we think our generosity is going to result in a lot of opportunities. So the pipeline, will grow specifically as we introduce these new products, and we do have 290 customers that, as we introduce our new software platform in the first half of this year, that we're going to be able to upgrade the existing installed base with the new software and the new functionality. And then as we actually release like the DOTS reader at the end of the year, We're going to be doing that through a group called Labware. Labware is the world's leading laboratory information management system. These are enterprise solutions that they've got 25 of the 27 largest pharmaceutical companies as their customers, and our readers are an important part of them delivering on their promise of the life science Internet of Things. So we think we're sort of supporting Newton's second law of physics, which is force equals mass times acceleration. So collaborating with people like companies like Sartorius and like Labware is going to help us get into the market more quickly than we could do on our own.
That's very helpful. How do you envision the economics of your real-time digital processing platform, DOTS? Will this be an equipment sell, a combination of rental with consumables? Help us understand what your thinking is along those lines.
Yeah, that was one of Helena's prime directives to us, is how do we migrate this new business that we're getting from the 50% gross margin type business to more like an 80% gross margin business. We're going to do that through 3 different approaches. We're going to sell the devices. There's about an 80%, little less than an 80% gross margin on those products. We have software revenue, and there's also recurring revenue from consumables related to our liquid injection systems.
Okay. I thought I saw in the presentation there that the bioprocessing industry is dealing with a yield loss of between 35 and 50%. With your new platform, how much improvement do you think you could bring to the industry?
Well, we think we can conservatively cut that in half. A lot of it has to do with what type of market penetration we get, but by being able to monitor the process in real time, you're going to be able to keep the processes within the design space. Now there'll be things that they can't control, but that's going to drive us to be constantly adding new analytes that we'll be able to monitor, and machine learning will have a huge impact on that as well. So we think we can cut it at least in half.
Interesting. Can you dive a little deeper on the importance of moving your R&D operations from Pittsburgh to Germany?
Well, when we acquired Aquila, it was much more than just the revenue from that business, and it was much more than even than their product roadmap. It was really, we acquired the skill sets of 4 incredibly talented leaders, the 4 founders of that company, and they just bring incredible product development talents and discipline to the process. Most small companies, when they run into trouble basically for 2 reasons. One is, how do you take a good idea and manifest it into a commercial sellable product? And they've done that. They learned how to do that the hard way. They did it with only $2 million of invested capital. And then the second thing is, sales and marketing. And so that's the nice thing is that we really moved our team to Germany because we thought probably the best thing that would ever happen in their career is to be able to have these, they're all young, they're like 32 years old, but they are just terrific managers. They're inspirational leaders. And I think Helena and I feel very, very glad that we added them to the team at Scientific Industries.
That's great. Turning to the core business, help us understand what kind of growth we can expect from the pill counting business with Torbal. And, you mentioned that the market's about $40 million. How much of that do you think you can capture?
Thanks, Joe. Well, based on on industry information available to us, I do believe that we should see a nice steady growth curve, particularly in the automated pill counting business. And with everything that we're doing here, which that includes things like the distribution agreements that we have, one with RX Systems here in the US, giving us really great coverage with a very knowledgeable sales rep team that has feet out at the customer sites. Our aggressive marketing campaign, we're being very aggressive particularly on the digital marketing. Our investment in additional pill counting products with the 2 new products due to be launched. I really think that based on all those things that we're doing, that we should be poised to capture somewhere between $2.5 to $5 million of that market within the next 3 to 5 years, and then building from there. And these are really conservative numbers. The trend towards automated pill counting could really be a game changer for us. And those projections could easily, double or triple within, the next, 3 to 5 years.
Great. Now you got a lot of projects going on to help drive growth in the company. Can you help us understand what we should look at from a CapEx standpoint?
Well, on the core business, that the CapEx requirements have historically been funded through the company's operations, and we will continue to do that. Now, obviously, where we are investing more so is in the bioprocessing, and with the cash that's generated both from the core business and the financings that we've, the cash that we've been able to raise, we are in a great position to invest the right amounts in CapEx that are going to be necessary for us to really implement our strategy going forward. I think we're in a really good position to do that.
Very good. And, looking forward, how do you see the revenue mix in 3 to 5 years between the core business and the new bioprocessing business?
Well, as you know now, the benchtop lab equipment is the driver of the revenues. And while I see that in the short term still being the case, I do expect that in about 3 years that we could be at 50-50, and then thereafter we start turning the tide where the bioprocessing products will be the 75%, and the benchtop will be the 25%, which is really why we're investing in the bioprocessing. That's the trend that we see.
Okay. Do you guys have any plans on uplisting onto the NASDAQ that you can share with us?
Yes, we do. There are certain things that we want to do first, all the things that John was talking about and that I've been talking about, which, so I think this year we're really going to concentrate internally on our operations and on those things that we need to do. And I think once that's done, we will be in a great position to move up to NASDAQ, as has always been our plan.
Great. Last question. What are the top 2 things about Scientific Industries that you would like investors to walk away from today?
I don't know if I have the same idea as John, so I'll say what my idea is, and then he can share his thoughts. But perfect. I think that the top 2 things about our company that investors should definitely walk away with today are, one, that we are well poised to act on our strategy for growth, both in terms of capital requirements, and that's especially true since we closed on our last financing about a month ago. And that gives us the capital we need for the next couple of years, and that puts that on the side so we don't have to worry about that. And 2, that we do have the tools, including the personnel, the individuals that John spoke of, in the facilities to implement our growth strategy, and not only implement it, but implement it in a controlled, in a disciplined manner.
And I couldn't have actually said that better. I think that the 2 things I would say would be, number one, it's so unusual to be able to invest in a company that's 70 years old, that has, a $28 million market cap, that has a huge installed base of instruments, and that is looking to transform an industry as large as the life sciences industry, and has the benefit of the leadership of somebody like Helena, who has run a profitable business for over 20 years and has all those disciplines and has all the things that, knows how to make money. And basically, we're layering now this growth engine on it that promises much higher margins and much higher growth than the company's ever experienced. And that's a unique, I think, relatively low risk opportunity. And we're excited about the future.
Fantastic. John and Helena, thank you very much for your time today. We greatly appreciate, this overview. Again, if you'd like to sign up for one-on-one meetings, please visit lythampartners.com/virtual and click the one-on-one meeting request button. We wish you all a good day and enjoy the conference.